Good morning, traders. It's 8 a.m. Chicago time on Wednesday, the 14th of June, 2023. Thanks for joining me today. This is episode number 2483. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. I mean, who can recite that now? Now that you've heard it 2,483 times, who can recite it without looking it up? Um, Here's the conversion trading pre-market summary sheet today. We do have the FOMC rate decision today. Remember, the meeting started yesterday. CPI was the last key release before this decision. And we saw CPI come in weaker than expected yesterday. Gave us a bit of a pop, and we ended up opening in a gap pretty much across the board. And then this morning we got PPI, Producer Price Index. PPI came in, was expected to have a reduction of 10 basis points and negative 0.1%. Came off 30 basis points. Negative 0.3% on the month-on-month, and again, more indication that the price pressure is coming off. The core PPI, however, came in line at 0.2%, 0.2%. The prior 0.2%. So overall, we saw the market flutter around a little bit, but the lock is in really. And the rate decision is what matters now, and that rate decision is coming out at 2 p.m. Eastern, 2 p.m. Eastern today. And then, of course, the press conference, the economic projections, all that stuff also come out. The press conference is at 2:30, and press conference is at 2:30. This evening we get the balance of trade out of Japan. We get some numbers out of Australia, employment change, inflation expectations. And then China releases the housing price index, industrial production, retail sales, unemployment rate, and fixed asset investment year on year. All of that comes out of China this evening. So, a fairly busy day, but for us day traders here, short-term traders, what we focus on is the Fed really, and the movement, and the impacts of the Fed decision, which, by the way, has been hovering, the probability of which the rate remaining unchanged, where the Fed will not hike but will pause, which doesn't mean that the Fed is taking its knee off of the market's throat. It just means it's not pressing as hard, but its knee remains on the market's throat, and it's now time to see how the numbers unfold going forward. So it's not quantitative easing, it's still tightening because the rate is just pausing. It is not backing off. Kind of like inflation at 5% versus where it was, where the CPI was at 10%, doesn't mean prices go down. It just means they don't rise as rapidly. So the conditions are still such that there is concern, and there's also concern of deflation going forward, and so on and so forth. But please, listen to macroeconomists. I'm not one of them. But here's the Fed fund rate probability for today's decision. They're now pricing in 93% probability of holding and 7% probability of increasing by 25 basis points. This was 75 to 25, 75% probability of raising 25 basis points, and 25 percent probability of holding just 1 week ago or so. I think it was about a week ago. It was at 75%. Now the raise is at 7%. So things kind of flipped last week. pretty aggressively, and then today we get to unveil what the actual decision is. So keep an eye out for that. Don't don't hit your limit before that number comes out and the volatility comes in. Um, the market condition currently is mixed. Europe has a slight risk on tilt to it. Lennar is announcing, Lennar is a home builder, is announcing after the close today. Again, the Fed is expected to hold PPI lower than expected. EU antitrust regulators charge Google on anti-competitive ad tech practices and propose breaking up business and preliminary ruling. That's bad news for Google right there. Nvidia's valuation passes $1 trillion on the back of AI. AI is hot currently, as you can imagine. And then now looking at the S&P, the S&P has a multi-distribution profile and has been trading relatively lightly. It's in line with the prior sessions, but it has traded lower against the settlement on the reopen. Bounced up, took out yesterday's high, put in a higher high, and has been kind of sitting sideways. So it's got two distributions today. 68% of the inventory is long. The range is getting tighter than we've seen in the last couple of days at 15 points. The point of control remains above 4,400 at 44.24. That's what you need to know. Let's take a look at the charts. If we look at the charts, yeah. The key thing that I'm seeing when I look at the profiles here is that what's this doing here? Is the way this thing is pushing higher prices. It's not actually higher time frames doing this by evidence of the type of movement that we have. We're seeing almost we're seeing small investor types participating here, except for that push the other day on Monday, which took us from one balanced distribution into yesterday, which was a balanced distribution. We're not seeing the kind of movement where the market's really frantically pricing in higher prices. We're seeing the kind of movement where I described this in yesterday's Convergent Trading Trade Talk. Where this investment that I make every week into my children's brokerage accounts, and every week it just goes in and it's a specified amount of money, and it just goes in and it buys a basket of ETFs for diversification, and that's the kind of thing that we're seeing. We're not really seeing price discovery that's clean. And what does clean price discovery look like? It doesn't look like this. It doesn't look like it's gappy. It's gappy and it's disjointed with weak structure. What we would see is the market taking a push, consolidate, pull back, consolidate, and then continue as we repair the structures underneath us. The description of this I gave, I don't know how long ago. Some of you have been here long enough to remember. Maybe last summer or something. I described it as a wall, as a concrete block wall, and a strong wall would have every concrete block laid in each row, right? So you'd finish a row, you'd cement it in, and then you'd start on the next row. You would stagger the blocks from each other for extra strength, and then you do the next row, and then the next row, and the next row. When the structure is poor, that wall is basically being built with a block here, then we do the block on top, then we leave a gap, then we do another block, and then we leave another gap, and then we do a block next to it. And so we end up with a wall that is a wall, but it's got a lot of openings in it. So if you put enough load on it, from the top or on the side, it's not as strong. And that's what we call weak structure. And that's really what we have here. Strong structure, is balance that pushes, pulls back, continues, pulls back, continues, and ever since we broke out of balance, it's been weak structure after weak structure. So we can see that evidence in the profile on the right. You can see below 4,400 all the way down to 4,370, which I mentioned yesterday. Pretty weak structure there. There wasn't a clean two-way auction there, testing prices both ways and ensuring that prices are accepted pretty well before moving on. We're seeing that down here at the 43.10 area all the way down to 42.80. We're seeing the same thing, and then we start to get into better structures of 42.60 and so on. So to me, a rotation down is likely to target 43.70 before they step in, and then if not, it's likely to skip through and push to the 4300. And if it can't hold the 4300, we have a pretty good base out of 4270. So it's the problem with the type of action that we have now is that it is kind of relentless. It's pushing against it's pushing against the wall of small incremental buying. It's not like you can short it. So, for me, a short has to, for me to turn and look short. Oops, wrong color. For me to turn and look short here, what has to happen is we have to, test up, fail, and then have an impulse day down, a big range day down with a weak return that holds and then turns lower, and then that creates the opportunity to trade against the impulse and push lower. But just because some people think that, hey, there's some real problems with commercial banking, real problems with debt, same store sales versus debt, like that statistic right now is so upside down, it's insane. A lot of people are carrying very expensive short-term debt, credit cards, payday loans, that sort of stuff. And we're not seeing that priced in. But the thing with a bull market, if this is a bull market, is that it'll climb right through that. It'll climb right through these horror stories that we hear. So you got to believe the price action. And the price action is saying what? It's saying no shorts. We gapped up yesterday. We had a gap and go situation. The gap zone was not filled. It was filled in the NASDAQ. It was not filled in the ES. It was not filled in the ES. And until such time as we get a big drop, like a 1.5%, 2% day type of thing, and a weak pullback, a drop that then goes all the way back, has an 80, 90% retracement, doesn't qualify. We want to see a drop and then everybody's spooked and not wanting to buy. Then we're looking to the short side, and then the market kind of balances out. Do I care if the market goes short or long? Technically, I don't, but realistically, I do, because we get paid on the short side much more easily, much more quickly, because the short side tends to trigger stops, which tend to cause more volatility and more distance, more range, more volume, whereas the upside has to be a conscious investment by market participants. We generally don't hit buy stops for the market to keep going up, and it tends to be kind of a drag, and you have to sit in the trade for 2-3 times longer to get half the range. So it's not as much fun, and that's the condition that we're in. So let's be realistic about what we're expecting from the markets here and how it's trading. If you let's look at the relative delta just for a second, because this chart's clean enough and it shows it well. You look at, this morning. This morning we open. Look at the VWAP. The VWAP is the dashed line. We snake around the VWAP. We hold it from below. We hold it from above. We trade, and then we move away. So this, if I was here and trading, there would be nothing to do through the Asian session, but the European Open is right here. This is the European Open. This will be the first indication that there is something for me to do. But what you see it do is it pulls back to the VWAP, bounces off, pulls back to the VWAP, bounces off. Here's the PPI release. There it is, this long bar. And now we're getting below the VWAP. And so we push the high, and what do? We don't walk away from that high. We don't back off the high. This is not a condition that you want to be short in. Once the Europeans opened, large lots were pretty active. Small lots were pretty active on the buy side. Very large lots were selling incrementally, not that great. And only now did we fall through the VWAP and are testing from below. So keep things simple and understand that, if the market is putting highs and it's not walking away from these highs, it hasn't found its sellers. That's really the point. It hasn't found its sellers. If it has found its sellers, you would see it fall off very quickly. And so there's really no point in getting short. Shorts, maybe scalps. There are some opportunities that I saw yesterday where you had some trapped longs, and you can take a scalp and maybe pull 3-4 points out of the market. But these are not structured trades. These are not the kinds of trades that you would, bet big on. And what we have is a market that's just not falling off its higher prices. We see that the delta is falling off. Here's the delta is the shaded area. We see the delta's falling off. The small lots are taking over more and more on the short side. Large lots are starting to sell a little bit. They're trying to hold steady here, and the delta is back to zero. So what does that tell us? It tells us that we are coming into an open that is very much balanced after a day that was very balanced. And so come in with the expectation, as a trader, come in with the expectation that, hey, I've got to be more selective today. I have to really stick to my discipline and my A-plus setups. And just come in with that kind of consciousness into the session. I cannot overemphasize how important this is for you as a trader to come in with the correct mindset. So, maybe after Monday, the big, the consolidation for 3 hours and then a huge break to the upside and then consolidation into the close. You're like, okay, there's some action here. I better get in. I better do something. And then you come into yesterday and it just didn't really go anywhere. Just come in today understanding that, look, I'll take what it'll give me, but it needs to meet my criteria. It has to meet my criteria. The market does what it does. The market is a force of nature. We don't control the wind. We don't control the waves on the ocean. We are just windsurfers or surfers, wave surfers and things like that. But, if you walk up to the beach and the waters are choppy and calm-ish and there's not much wind, there's no sense in going out there and paddling your head off and, getting angry at the ocean that it's not giving you the waves. You just come in understanding that, hey, I've got to do something else with my time, or I have to sit here and wait for the wind to pick up and for the waves to kind of start picking up. Here's the NASDAQ. Same story in the NQ, bounce, 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 PPI, and then after PPI, they've taken it through the open. So the NASDAQ's looking a little more bearish, I want to say, but the NASDAQ actually pushed into the prior range. So if we look at what it did yesterday, here's the NQ. The NASDAQ actually pushed into its prior range yesterday. Here's a Monday's range. This is the big breakout on Monday, and the NASDAQ opened in a gap, and it actually came back in yesterday, and it did its gap to settle trade yesterday. We got the gap to settle trade in the NQ right in here yesterday, and it bounced, and basically the Nasdaq was completely balanced yesterday. And then you are coming in today with a higher high, lower high, higher high to yesterday, lower high, and we're breaking to the downside. Understand that we're doing so against highs of the year. So yeah, it is, weak-ish against the overnight trade or the overnight action, but overall, it's still inside of yesterday's balance. Still, it's right against all-time high, not all-time highs, the year's highs, and so on. So you have to be measured going short. If this thing moves low enough, more money is likely to come in and take it up, and so on and so forth. So what does that mean? Today, really expect it to be really freaking choppy. Really freaking choppy. We came in and we're coming in after a balanced day. Here's the ES. We're coming in after a balanced day yesterday. After a balanced day yesterday, where we've pushed highs, but we really haven't moved away from yesterday's balance. We're coming into a big news day. Today, the settlement price is just below. It's 3 points below, so it's opening almost unchanged on the session, which is actually pretty important for many fund managers. Where are we? Where are we versus the prior session that tells them, is the market tilted one way or another? And they're going to come in and they're going to find that the market's not tilted at all, and they're likely to just hold on to their purse and wait for the Fed to do its thing. So if you have scalp setups, scalp your setups. But otherwise, it's not a wise day to sit here and commit a bunch of emotional capital and hope and pray and put on a position and hope it comes back to scratch so you can be made whole and you can feel good about yourself again. It is best to just make sure that you're not participating with the market unless there's something that is absolutely A plus that's coming in. The roll is about 86% done in the ES, 86%. Normally, it's in the high 90s by Wednesday, and we can go back to using delta the way we should and so on. And it's 83% done in the NQ. I posted those on Twitter with charts. So we have the roll effect. We have triple witching on Friday. We've got options hedging against these major levels, 44.25, 4,400, and then in the SPX, still, fighting the 43.75. There's a premium, the current premium between the cash and September is 47 points or something. So, you need to take that into account. There's a lot in play here. This is why the week of roll is just not a great week to participate. So I don't have any, there's no point in me throwing a bunch of scenarios at you today because it is the Fed. I am tracking support areas, potential support areas, and so on with these bands, and I'm watching what the price action is doing, and this is what the price action is doing. It is pretty weak price action, even though it keeps pushing to the upside. I'm expecting that it's going to continue to be weak buyers in this. I'm not seeing really heavy, strong, high volume type pushes just yet. When you look at the composite, here's the composite for the ES. We're well away from our composite point of control. This composite profile here is 504 days or 2 years of trading. The anchored VWAP from the all-time high is below us, also at 4180. And we're moving away from it. We're near the 44.57. If you have some properly back adjusted charts, this will show up as 44.5650. So Edge Pro X has it pretty close to right. It's only off by 2 ticks. I'm happy with that. And we're not moving away from these highs. So if you're someone who's looking for some real action, We need to move away from these highs. We need to find those sellers to have a two-way auction. For now, it's just likely to just grind up and up and up. And then, FOMC today. So that's what I have for you. Unfortunately, I don't have anything great to talk about. This is the TPO detailed chart. We have the break from Monday. We've established another balanced distribution. You can see that it yesterday pushed into Monday a little bit. Good check of settlement yesterday by the Nasdaq. It's still building these kind of weakish structures. Here's the ES. We have a bunch of balance beneath us from the beginning of May all the way to the beginning of June. Then we have another balance profile in June. Then we broke away on Monday, built a new balance profile today. We're likely to have a balance profile until the FOMC comes out. We still have a gap underneath us. We still have a ways to go into 43.70, and beneath that 43.30 brings us back into some real structure. This is what I'm seeing. I'm sharing what I have for you, my homework, and for today I'm simply going to wait for the FOMC. So if you're a Convergent member, you'll notice I'll post when there's something useful to post. Otherwise, it's just going to be quiet. I'm just going to be quiet in there because, there's likely not to be all that much to post about. Good luck. Don't forget to hit the like button. Let me know in the comments to these videos or in the live chat, preferably in the comments of the videos. If you're picking things up, if this makes sense to you, if I'm full of poopy poop when it comes to what you know about trading versus what I'm telling you, if my experience is translating into actionable execution on your end, or if I'm scaring the bejesus out of you, or if I'm keeping you out of good trades or whatever. And please don't forget to hit the like button. And if you're not subscribed to the channel, it is free. Just hit the subscribe button on YouTube. That helps give the channel a little more exposure to other traders who are looking to trade for the long term. Good luck, and I'll catch you tomorrow. We'll talk about the FOMC. Take care.